So proudly we hailed at the twilight's last gleaming, whose broad stripes and bright stars through the perilous fight and the ramparts we watched were so gallantly streamed. And the rocket's red glare, the bombs bursting in air, gave proof through the night that our flag was still there. Oh, say does that star-spangled banner yet wave o'er the land of the free and the home of the brave?
Good morning to you on this September 25th, 2025. This is World HD, live each weekday, 8 a.m. Eastern Time. You can find the show on Rumble, X, and YouTube. And today's Equity Thursday, so we're really going to take a look at some things. We really got overcooked the last couple days. Make sure I've got sound and everything. It looks good. It looks good. Let me just make sure here. I think we're good. Okay. So we got a few in the room there. Trumpet, Rachel. Good morning, Frank. Good morning to you guys. So we're going to look at some stocks, and I want to go through a couple things. We have Intel in the news again. Okay, we have Oracle in the news with some debt offerings. And then we have a couple things with these sectoral tariffs and then the reciprocal tariffs. I want to talk a little bit about that, and then go through a couple charts. I want to look at this gold. Some interesting things going on in gold again. You know, we've got this gold silver ratio. It's a little bit out of whack. Let me check this out. Shut that off. Okay. Here we go. That's not up to date. It's always something. Okay. So go through Oracle, go through Intel, go through what these sectoral tariffs mean. We haven't talked about tariffs in a while, right? It was a big, big deal back in April, and then it sort of faded and hasn't been as big of a deal lately. It's funny how this stuff works, right? You know, tariffs are nonstop talk. And then actually when stuff's happening, right, they don't really cover it. That's what I think's going on now. They're really not covering this that well. A little bit of hint there and there, here and there. And you kind of have to look, you have to actually dig for it now instead of it being pushed in your face, all right? But there's some good things happening, some good stabilization going on in the tariffs. Good things happening for the U.S., I think, in terms of, sustainability with these tariffs. And there's 12 cases right now in the sectoral tariff space, Section 232 that are in play, and the administration's getting pretty good at moving through these. So remember, when we first started, we had like 80 some countries, and it was people made fun of it, and how are they going to get through all this stuff and so forth. And they're actually doing it. That's the funny thing, right? They're actually getting through it. And of course, the media is not covering it. You probably don't hear much about it at this point. So, that thing's really lagging. Okay, I think we're caught up now. All right. I know it doesn't seem like much, but there's like a lot of things that can go wrong. Trust me. Okay. All right. And I actually got fairly good at doing this on my own, and then okay at it, right? And then Frankie came along, and it was good because the show got better for sure. But then I lose all these skills, and it's like you got to get them all back. Okay. All right. So we'll take a look at the stocks today because today is Equity Thursday or Stock Day. And then, I wanted to, let's see here. I did want to talk a little bit about this Charlie Kirk situation. All right. Again, it happens. There's a lot of misdirection that goes on. And then, a couple weeks go by. What are we probably at about approaching 2 weeks? I would say somewhere around in that time frame since the shooting, since his assassination. And, people have spent tons and tons of time on this, and we still don't have the answers. But here are the big things to me that don't add up, okay? And it makes us, again, we can never trust. That's the problem, right? They just continue to break down our trust in, the FBI, the policing agencies, because things just don't add up. And here are the things, right? So again, we talked about this the other day where, if this was the gun, okay, 30-06, right? It's a high-powered rifle. If this was the gun that was actually used, then the ballistics and the situation that they're trying to tell us doesn't make sense, okay? That the bullet stayed in his body. There's almost no chance of that. Unless this guy, there's always a chance, right? Like if this kid was reloading his own rounds, okay, and he didn't, pack it to its typical, full metal jacket bullet or round, and then and then he didn't put enough of the gunpowder, the grains, how many grains of explosives essentially, right, behind the bullet to power it, because these things are typically going to travel at 2,500 to 3,200 feet per second, depending upon, the size of the round, and then how much is in the casing, right? How much explosives, essentially gunpowder, do they put behind this thing? So if he was reloading, okay, that's a different story. But the problem is this, with that kind of a caliber um, weapon and the noise that it makes, there was no crowd reaction, right? There was a guy on yesterday who was I think he was a Green Beret, and he was talking about this. And this is what I've been questioning too. It's like, yeah, they want you to focus on obviously, the blood coming out of the neck, and it's a terrible, terrible sight. It's horrific. But if you really watch the people in the background, like there's not that much of a reaction. And a gun that size, a gun with that kind of, um, noise that would come out of it, right? Would be deafening. Um, you know, it, unless it was suppressed, okay, unless it had a suppressor on it. But even at 2,000 feet per second, anything above this, anytime you crack the sound barrier, it's loud. So you can. The way to really make things quiet is to bring them subsonic. Okay, so you got to bring them down into to a slower speed rate, to a slower speed, and then you put suppression on it, and now all of a sudden you can make things pretty quiet. So again, we weren't there, we don't know, but it doesn't sound like it was that type of weapon. So two things: the bullet with with the 30-06 wouldn't, the odds of it staying inside the body at whatever angle, it doesn't matter whether whatever angle it was shot at, is not logical. The fact that cervical, these are the up in here, up in this range, those are the weakest vertebrae you have. Not the weakest, the most flexible, right? And therefore not the most durable. So not tons and tons of bone density. So that makes no sense. And then the sound, right? Watch the crowd reaction. Like you would think if that would sound like a cannon going off in there, right? Especially inside those buildings, inside that space, that reverberation, people would scare people. I think it was the visuals that scared them once they saw him falling over, right? That was the reaction, and obviously some sound, but it didn't drop them to their knees. So that's another one, right? And then, if you think back to it, they got the shooter, then they didn't have the shooter, then they had the shooter, then they didn't have the shooter. That's a lot of misdirection. In some ways that would seem intentional, right? Create a lot of confusion instead of saying, hey, look, we know nothing right now. Give us 24 hours and then we'll know something, and just it just doesn't instill faith when you say you got the guy, then you don't. Then you got the guy, then you don't. Then you've got the guy, then you don't. That kind of stuff. And then, of course, it has to have a connection to a trans shooter. So, I mean, there's all these things that start to pop up, and I think the biggest one to me is the reaction out of the crowd. The reaction out of the crowd doesn't seem like that size of a weapon and that kind of noise. And then you can get into all kinds of things. So it feels to me like we're being lied to. Is it, I don't know why, right? I don't know why. I think a lot of times these things are misdirections. Was this thing planned? Was it a targeted shot by someone other than a disgruntled kid? It sure starts to feel that way. And so anyway, I just wanted to update that because in that period of time over the last 2 weeks, the question to ask ourselves from the financial markets is what's gone on since then? Like what has occurred, right? If this was meant to be a distraction, like what's gone on, right? That's why I think we have to ask that question. If they wanted to direct our attention away, and I'm not going to call this, a lot of times I call these magic tricks, right? Like 9/11, look up here at these airplanes while we do this down here. In this particular case, this doesn't really feel like a magic trick, right? It's a devastating event. Look up here, look over here while we do this over here. That's the reason. So that's the question. What's gone on, right? That's what I'm paying attention to. What has happened in the last 2 weeks? They would have wanted to divert our attention away from this from something other going on. And then you start to add up that, yeah, this thing was planned. And then you can actually start to make assumptions as to who it was. You know what I mean? If you're like, okay, I think this is what they were doing during that window of time where they were diverting our attention away from. And we still may not know what it is, right? It might take another couple weeks until we actually see, like, again, you have to, I mean, it's almost like being an investigator, right? To see like, what are these guys up to, if they're up to anything at all? Or was it just a lie, right? Did something else happen, and is it just a lie that they're trying to cover up? That's the question. What the story they're telling us doesn't seem to be true. The next question is it just a lie? Are they trying to lie because they're incompetent or something of that nature? And then the other one is, was this some sort of a diversion plan to multiple things? Obviously take away that young voter who was definitely leaning toward, or Charlie Kirk was gaining momentum with that young voter. The Democrats can't win if someone like Charlie Kirk steals that young voter vote. Okay, so these are the things, it's leaning more to me toward, well, a cross between two incompetent. Is it incompetence or is it intentional incompetence? That's the thing. Like, I don't believe people are that incompetent. I really don't. I don't think the general people, I think they make us out to be that way, but I really don't think that we are. We shouldn't be, right? So I think it leans toward that third camp. Something else is going on. So that's why I'm skeptical, and that's why I'm watching to see what happened during that 2 week window of time where we were focused, where they had most of the people focused on this, and then this stuff over here was going on. So, okay. So that's the reason for the update on that. All right. And let's see. Good morning, Geo Rich, Crash and Splash. Craig knows guns. Well, yeah, I mean, a little bit, Rachel. I mean, I have spent some time around them in training and things. I don't, yeah, enough, right? I guess. I mean, yeah, I'll leave it at that. Enough. I guess I know enough. All right. Hopefully enough, right? Hopefully enough. Okay. All right, so let's keep rolling here. Let's take a look at this economic data. I want to look at this because we've got some. We had some impressive stuff yesterday. Actually, one thing for sure. All right. Okay. All right. So this week, again, just a quick reflection on this week. We had, of course, lots of FOMC speakers. Right. Last week, all those big central bank rate announcements, and on the back of that, this is what you get, right? Just the unloading of all the central bank members, whether it's the Bank of England and the Monetary Policy MPC, the Monetary Policy Committee, or the U.S. our FOMC, or the Bank of Japan. Although we haven't seen anyone there. Out of the euro, right? We see this Nagel guy all the time. Okay, and then this morning we get the Swiss National Bank monetary policy meeting, and they held rates at 0. Okay, so that was expected. But this Schlegel guy, okay, and at some point here I will be able to run clips again. I'll get this figured out. But this guy is just to put it in context, my perception is, and for those of you who remember, we ran the clips of this guy, young guy, probably really smart, but he just feels weak, like he can't stand his ground. Like he really feels like a puppet of some type. Okay. So he sort of caves a little bit and says, yeah, maybe we're going to go to negative interest rates. But see, that's a long way away, because at least a big mental shift away, because nobody even Japan has positive rates, right? For a long time, Japan was negative to 0 rates. And after a while, it just sort of dissipates into the news. It's not a big deal. But even Japan is now positive. So if Switzerland is actually going to go negative interest rates, that's going to be a big, like, in the financial space. It may not hit the news wires. I mean, it will for a little while, and it might hit the media a little bit, the financial media. But you're not going to hear that in 95% of, maybe higher than that. No one's going to talk about that. But in the financial world, people who are paying attention to this stuff, that's going to be a big deal, because they're saying to themselves, well, what's going on here? Why do they have to go to negative interest rates? We're talking about a Switzerland economy. We're talking about a lot of wealth. We're talking about, productive companies, that sell pharmaceuticals and watches and all, chocolates and all these things, right? That we think of when we think of Switzerland around the world in pretty big fashion. And they're going to negative interest rates, which means if you put in $1,000, that means you're going to get back like $975 back at the end of that duration of that loan. So if it's a 2-year loan and it's negative interest rates, in the end of 2 years, you're going to get back less than that, because it's per year. So you're going to get back, $950, let's just say approximately, instead of the 1,000. That's what it means when you go to negative interest rates. So who wants to do that? You're going to find another alternative. You're going to go to the U.S., it's a 4.25%, and you're going to say, I'm going to buy some U.S. Treasury bonds or something like that. At least I'm earning 4.25%. And with this, and as we break down these barriers, currency to me and debt markets are boundary based, right? It's based on productivity, culture, rules, laws, military of a country within that's defending that particular region called their home or their country. As soon as you start going to these cryptocurrencies and you start stepping outside that space, you break down these barriers. And that's the same kind of thing here. A lot of the perceived reason for Bitcoin to have gone up so much is that it became a tool for China to get money out of China and into other places, right? So now we have this whole rising up of this fintech space, right? Financial technology, right? Just gets shortened to fintech. So you get all these fintech companies where people can, they can store money in other places. So kind of offshore. All right. And so it's coming down to our level. It used to be just banks could do this kind of stuff and big institutions could do it, but now it's coming down to our level where it's, it is, we can do that, right? We can store it in a cryptocurrency or this or that or over in this country, or you can store it different places. And it's getting more and more efficient and quicker. So anyway, that's the reason why, this Swiss National Bank is important, and the currency. Okay. If they start going to negative interest rates, who wants to hold that currency? So this is where the currency and the debt markets are connected, right? Not many people are going to go through the Swiss franc. They're not going to hold it because essentially when they're holding a Swiss debt market, something in the Swiss debt, 2-year note, 5-year note, 10-year note, 10-year bond, 10-year note, anything longer than that, like why would they're essentially holding that currency too, So a lot of things are changing in this whole financial space, but that hopefully drives the point home of why this Swiss National Bank thing is interesting and what's going on here. What would cause a situation for the dollar to rally extensively against the Swiss franc, or the Swiss franc to fall drastically against the dollar, right? So that's the way we want to think about this, right? Is we've got, where's my hand? There we go. So you've got the dollar, I'm going to use this. So you got the dollar here kind of sitting in the center, right? And then you have the Swiss franc either above it or below it, and if it's above it and the interest rates are higher, then people want to move into that Swiss franc, right? So again, what we've seen for so many years is the Swiss franc has been going up and up and up and up and up against the dollar, right? What would cause that shift where the Swiss franc would go down and down and down and down and down against the dollar? So either the dollar can move a lot, or the Swiss franc can move up a lot, or the Swiss franc can move down a lot, or you can get a combination of both if you really get an accelerated move. So that's what we're thinking about, right? Big dollar move to the upside, potentially, with a big Swiss franc move to the downside. Okay, hopefully that makes some sense. All right, and then we also hit this week a lot on the manufacturing stuff. So again, we saw all these PMIs come out of Europe. Germany, UK, where else? France, Euro, all of them were negative, every single one of them. So we had that day, I think it was Tuesday, where we just had terrible data coming out of Europe. And then we backed it up yesterday with some bad data out of Europe too. What was it? I forget. There was something else that came out yesterday. Anyway, bad data out of Europe this week, and okay in the US. And that's what we'll get to. And so the rest of this week, we have final GDP out of the U.S. today at 8:30, which we'll take a peek at. And then we get durable goods out, I think at like 10 o'clock or something. And then tomorrow's is PCE number. So again, back to the Fed. The personal consumption expenditures, or PCE index, is the Fed's preferred method of measuring inflation. Okay. And you'll see that in the reports. Like when we've talked about these dot plots and these different things that the Fed uses and puts out for people to consume, mostly the investment community. But nonetheless, it's these, the PCE is a preferred method for them. And you'll see that popping up whenever they put data out. Okay, let's take a look at this. So we had Wednesday. Let's look back yesterday. What happened? We had this UBS business expectations. Again, not as bad as expected, although still quite negative. This was the one that was bad. The German IFO Business Climate Index, 89.3, came at 87.7. So that just kind of stacked on top of the day before, which was really bad data coming out of Europe. Now we get this U.S. new home sales, really great number, 650, expectations out at 800, actual was 800,000 new home sales. So pretty amazing, really. Okay, then we get this crude oil inventories, 0.8 million, comes in at minus 0.6 million barrels. So again, a drawdown. So that should be bullish for crude oil. That's what we would want to see. I don't think that it was. I haven't had a chance to look at crude oil too much this morning, getting some stuff ready for the show and so forth. But let's take a look at, let's take a look at this. I think this is what we want. Yeah. Okay, perfect. I want to take a look at this housing data. And let's go, here we are. Okay, so I've got it up here. So this is what we're looking at over the last, let's say, 7 or 8 years. We can stretch this out too. Okay, this isn't bad. Like you can see, okay, so what we're looking at here is from 2000. So coming out of the real estate bubble, all right, you see this claw back, right, from 2011. I can probably get it back into the real estate bubble too. There we go. It's a little bit closer. So you get the real estate, 2008, real estate debacle. And then we climb out of that for, 2010 to 2021. We had a peak up here at 1,000. What is this? Basically 1 million new home sales for a couple, from 2020. So again, this is the end of Trump 1.0, right? Things are clicking. People are buying homes. You see this nice big, spike up in here, and it holds for a little while, right? From September of 2020 all the way into April of 2021. And then you can see things start to come off, okay, and then it starts to flatten out. Now, what's so interesting is this. Look at this read from yesterday, okay, 800,000. So again, that's pressing on those highs back in 2022, January of 2022. So again, other than this significant spot back in here, where you get 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 1 year essentially from August of 2020 until, let's say, late summer, June of 2020, this whole range in here. Other than that, this is like one of the highest reads we've ever seen, okay, other than this one bar right there back in January of 2022. So this is significant, right? This is a kind of a significant deal. And so it's a surprise in my mind. That's a big surprise. And so remember, we had pretty negative housing data, and I need to update the housing data. We'll take a look at that tomorrow. I'll make a note of that to make sure we get that up to date, because we had all negative reads so far. Okay, everything was negative, and then we get this surprise number, that just comes out of nowhere. So, is the Trump economy, economic plan working? Well, we see the housing back in 2020 when he was leaving office, that big, the best ever, okay, like he says, the best economy ever. And then we see this, situation where we're kind of trending back up in that direction. And we know that home sales are important, right? We know we're living a consumption economy of 65 to 80% of it is consumption based. And out of that, a big chunk of it's housing, right? So housing is a big part of that consumption engine in the US. So again, lower interest rates, right? Driving this kind of stuff, or the perception of. And so this is we almost expect some kind of revision down next month, because it's hard to figure out where this number actually came from, because we didn't see any signs of it. There were no signs of this, like you would see, housing starts or something like that. You would want to see something that gives you an indication of this number. This number just kind of came out of nowhere, but it's a good sign. Okay. So if this number holds up for the next month or two, again, one data point doesn't make a trend, and you can see the trend wasn't up. This is the beginning of a potential trend up. I'd say at best we were flat, maybe even slightly trending down. Now, we're headed back to the upside. So if you can see that, right, you can see for the last from 2023 to 20 until now, I'd say we were pretty much flat, and this is a potential game changer, the beginning of a potential uptrend. All right. So significant, something to keep in mind. All right. Okay, let's get through the rest of this. I don't think I had too much on here for today. We had the Swiss National Bank, and then we have U.S. final GDP out at, it's not 4 a.m. I ran out of time to update this, I think. So let's see. Let's just go back to this. We'll just do it off of here. All right. Okay. Let's just do this off here. So we had the Swiss National Bank policy rate, and okay, so that was at 0. We talked about that. This final GDP out in 5 minutes, expected at 3.3%. And we'll see where that comes in. Let's see what we've got here, if this is trending, if we've got any kind of a trend here. So again, it looks pretty negative. Let's bring this in, because we're getting the full amount of data, and we're getting distorted by the COVID deal. But here we are, right? We're expected at month over month. Why is this coming up as 3.3 when that number doesn't really make a lot of sense right there, does it? 3.3%, but we're showing 0 on this. I think something's wrong with this data. Anyway, we'll watch and see what comes out. We'll watch it on the news wires and see where this comes out. Again, I think the 3.3% is correct. I just don't think this chart's up to date. Something's not right with this thing. Okay, but anyway, what else do we have today? We have the unemployment claims expected at 233. We know that this stuff has stayed pretty stable. Okay, we saw this one, we've seen a couple spikes in here in, October of 2024, late last year, and then we saw this last spike up above 260. And so what does this do? This is what kind of gives the Federal Reserve that ability to start cutting rates, right? Jobs. Okay, so again, price stability and employment, right? Maximum employment. When you start to see these unemployment claims ticking up like that, it's a precursor to job issues, okay? People cutting jobs, and, and maybe more, right? Once it starts, it's sort of, once you get the cat out of the bag on jobs, a lot of times it just starts to unravel, right? Because it's a confidence thing, right? It's corporations lose confidence, the consumer loses confidence, and it all starts to trickle through. So again, it's good to see this number come back down, and, was that just a one-off up there? one-off data point. All right, and let's see if we've got. Then we get core durable goods and durable goods out today at like I think it's 10 o'clock if I'm not mistaken. What time is that one? I think maybe that actually comes out at 8:30 as well. So we'll get a chance to look at that. And then existing home sales. There it is. That's the one we've been looking for, right? The existing home sales. Usually that one comes before these. I don't know why it's later. So we'll watch that one today at 10 o'clock. And then we get natural gas storage at 10:30 a.m. It's been pretty muted. Let's take a look at that. We haven't looked at that in a little while, the natural gas storage numbers. So you can see the storage numbers starting to build. This is pretty typical. You know, really through this year, we've had everything stayed positive this all the way, well, since early 2020. You can see there's a cyclicality to this, right? It's pretty easy to see this thing goes down. You have draws, then you get builds, then you have draws, then you get builds, and that's where we're at now. We're building going into winter, okay? And so if you get a mild fall, you can get pretty big builds in natural gas because people aren't anticipating it. So, you know, they've got production running and all of a sudden they start to get these big builds. They try not to get these big builds. But we're going to talk a little bit about this, you know, natural gas, liquefied natural gas, and this continued distribution around the world. Turkey's actually going to be at the White House today. Erdogan of Turkey, okay? The turkeys, right? It's not Thanksgiving yet, but Erdogan of Turkey, right? You know, is going to be at the White House, and that's going to be one of their talking points. One of them is fighter jets. The other one is commercial jets, Boeing. So Lockheed, Boeing, and then natural gas, liquefied natural gas. So those are going to be their three big talking points, it appears. And I'm sure there'll be some things with NATO too, because we know Turkey's a big antagonist on that front. Okay. So, but anyway, that looks pretty stable. And then we get a series of FOMC speakers again, right? We get Barr, Logan, Daly, and then tonight we'll get Tokyo, Japan core CPI out of Tokyo. All right. Okay. So I think that covers that stuff. And then, all right, so let's get on to some of the headlines here. I'm going to start going into this, and then we've got, what, a couple minutes? Yeah, we got a minute and a half until we get to, all right, till we get to the data. And, okay, so Oracle places this $18 billion bond sale. Okay, this sounds boring, right? It sounds really, really boring. Like, who cares about a bond sale, right, at Oracle? Right, but let's dig into this a little bit and just kind of talk about what this means, right? So again, first off, second largest bond sale this year, okay, on the corporate side. Okay, so that's has a little bit of significance, okay? And we haven't been seeing as much issuance, okay? Corporations haven't been issuing as much debt as normal, okay? So below average. But here's the thing, for this debt sale, $18 billion of a bond, right? Up for sale. $88 billion of orders, more than 4 times the $18 billion actually showed up, right? For this $18 billion bond sale. So we talk about this bid to cover, right? Same kind of a thing here. People want to own this debt, right? They really want to own this debt. Investors want to own bond investors really want to own this debt. That's what it says. It's basically way oversubscribed, okay? People want this debt. So, and then what this is doing is it's might have a positive rollover effect, because this in September, okay, there were $180 billion of bond sales in September alone. Now, bond sales haven't been great this year. This is the second largest bond sale of the year. It was oversubscribed. And now all of a sudden, in the month of September, bond sales have picked up. So I think the market probably knew that this debt offering was going to be made. They knew that it was going to go well because they heard the word on the street that, hey, you know, Oracle's going to auction off this $18 billion. People are like, wow, I want to own some of that. People are talking about it, you know, and then what happens? It trickles over to the other corporations who want to issue debt. And so now so you can see how this confidence thing builds, right? And so when you get companies like Oracle that are doing quite well, we've seen Oracle in the news a lot lately with, now you can say this double-edged sword, right? There's good and there's bad to this Oracle thing. Larry Ellison is not, I mean, he seems a little bit crazy, right? To say the least. And what they're trying to do with this, and we can, you know, and that's what we did with the Technocracy Roundtable last night, was talk about these sovereign wealth funds and talking about this kind of stuff and the risks of this technocracy. And this falls in that camp. Now, that being said, though, from an investment perspective, this is pretty positive. Okay, this is a really positive thing. All right, so here's where we really get in. I think it gets a little more interesting. So the tech is known for financing things with and doing things with free cash flow, right? Because they spin off so much cash. That's why the tech stocks have been on fire, right? Because the behemoths, the big stalwarts, they spin off tons and tons of cash. So they don't really need to go to the debt markets, okay? But now it's looking like they're also starting to tap these bond markets, even though the demand seems to be there at this time, right? It's a confidence game, and this can change quickly. But right now, the confidence, the momentum is definitely moving in the favor of, you know, uh, these big tech. And here's the other thing, right? Is that this tells you how aggressive they're getting. We talked about this this meeting of CEOs yesterday in the tech space, getting together and saying they want to put out a marketing campaign to push this tech stuff even faster, okay, and an AI faster, right? And so, how do you do that? Well, if even though you're spinning off a bunch of free cash flow, one way to do that is go to the debt markets. So instead of doing this just with free cash flow, now they're leveraging. Okay, so this is the beginning of leveraging, which again doesn't sound bad for a company like Oracle, right? They've got the cash flow, they've got the balance sheet to do this, no big deal. But here's the problem: is this is how the beginning of a debt boom starts to occur, right? They start using leverage. The guys who can handle it start using leverage. Okay, the Fed starts cutting rates. Okay, that entices people in to some degree, but it also makes it riskier because, as the yields go down, it will trickle over to the corporate. So you're going to be reaching for more, okay, and getting less. And here's the worst part of it all is that all the wannabe companies that aren't quite the Oracles, or they aren't quite the Apples, or they aren't quite the, NVIDIAs, right? And they aren't the Microns, and they aren't the AMDs, right? They're a tier below, and they need to keep up. What do? They start going to the debt market, and the debt market sort of takes it because they say, well, you know what? This is kind of an offshoot of Oracle. It's an Oracle wannabe, so let's do that, right? So people take chances. It still costs more to do it, right? They're not going to get the same interest rate that Oracle is. It's kind of like, credit score, right? Your credit score is really high, you're going to get a lower interest rate. Your credit score is not as high, you're going to pay a little bit more in interest. But the market's still good, so they let you do it, even though maybe you shouldn't be. And this is how these debt bubbles start to build, okay? So this is the beginning of the evolution of that, potentially, right? So again, I think it's important, right? Important thing to keep in mind because one of how much the market wanted this debt, right? 18 billion, 88 billion of offerings in the mix, okay? Now, flipping over to Stephen Moran, okay? Stephen Moran is this guy, right, that was in the Trump administration, economic advisor, and then they pushed him over into the Federal Reserve. So now he's on the FOMC committee, right? He went through the Senate hearings and so forth. Okay, so now he was the big dissenter, right, in the last Fed meeting last week, the only one. We thought we were going to get 3. He was the only one. He's out making the rounds now, just like all these other FOMC speakers. Like we said, after they have these big, central bank rate announcements, sure enough, all the members come out and they have their speaking engagements, right? During the thing, they're in a blackout period, so they can't speak. And then all of a sudden, it's like pent up demand, right? They just want to go out and speak, right? Or they're called upon to come out and speak. And, and people make money off this, right? They do fundraisers. They have these guys come out and do speaking engagements, right? So again, it's a whole big to-do, right? There's a lot behind the scenes on that. But here's the deal, right? This guy, Stephen Moran, he's out on Bloomberg this morning, and I'm sure he'll make the rounds to Fox and CNBC, because once they make it one place, you can count on it. They're going to be all the other places shortly thereafter. This guy's calling for multiple 50 basis point rate cuts. This would be shocking to the markets, okay? It would also probably, create. This is the thing with the stocks, right? When we talk about, we went from solid to liquid to gas. Once we cross these harmonic levels, I may not like it, but that's the reality of it. We're above this level, and now we just put a Bunsen burner under this thing to heat it up even more, right? And to make it even more gaseous. So this is the kind of stuff that occurs when he starts calling for multiple 50 basis point rate cuts. This market, can really go. Now, what's on the backside of this? It could be, again, we've talked about these bubbles that occur. And this is, what I'm trying to do is point out the beginnings of a bubble. You never know where you are in the stages of a bubble, but we're definitely seeing the signs of it, okay? We're seeing these bubbly things starting to occur. But this can go on. Again, in 1996, we had Alan Greenspan, Federal Reserve chair at the time, come out and do this term that you've probably heard, right? He coined this term, irrational exuberance, okay? And then it took 3 or 4 years until the bubble actually popped, okay? And why is that? Because during that period of time, we had massive productivity gains, right? So again, you get all these productivity gains, but then you also get bubbles that occur around it. And then at some point, the bubble pops. You still retain a lot of those productivity gains, but you know, and the question is, can we take another one of those, right? That's the big question. All right, so let's keep rolling here. The other thing, one quick thing, let me wrap one more thing up with Stephen Moran, is that this guy's making things very difficult, very tough on Jerome Powell, our Fed chair, as he closes things out, because we know he's not coming back. They're probably going to announce within, I would assume in the near future. We know that they've already been interviewing. And that's the other question. When this guy comes out and asks for 50 basis point rate cuts, multiples, is he really just trying to interview for the chair job, for the Fed chair? I don't think they're going to pick him. I think they're probably going to pick Kevin Warsh. Trump likes the good looking people, right? I mean, like Hegseth, right? I mean, the guy's a good looking dude, right? So what is he going to do? Kevin Warsh is a pretty good looking dude, right? I think he liked Jerome Powell too at the time because he was a pretty good looking dude, in some ways. Now obviously we got bigger things here than picking, handsome people, to put in these roles. But nonetheless, I think Kevin Warsh is probably a high candidate. And these guys are sort of paving the way for Kevin Warsh and telling him, like, look, if you come in, we're going to be moving toward lower rates, And Kevin Hassett's another one in the mix, right? Chris Waller's another one in the mix. But if I had to guess, I would say Kevin Warsh, okay? Just because they're probably all in a similar camp. They're all going to move to lower interest rates. Just Kevin Warsh is probably the best looking of the five of those guys. And there's no women in the running, right? Otherwise, I would, if there was an attractive woman in there, I would think she would be a high candidate. Just saying, right? Or maybe I'm wrong on that. But anyway, okay, so let's jump on here. Okay, then we've got Intel shares jump on Apple talks. So Intel is possibly the story of a comeback kid. And and why is this? Not under their own doing, okay? A lot of this is because the government backed them, right? So the U.S. Trump administration came in and did a 9.9% backing, bought 10% share, right? So the big chunk of change, right? What was it? I think it was, I forget what the number was. A lot of money, right? I had the numbers down the other day, but here's the key point, right? Is the U.S. came in first and said they're going to buy a stake in Intel, okay? And they're going to use this CHIPS Act and these other things that, were already out there. But nonetheless, they're going to push this thing through. And then they come back with, I think, coercing NVIDIA, okay, with a $5 billion stake in Intel, okay? And that clearly implies, one, NVIDIA's backing of it. Two, NVIDIA's demand in the future to buy Intel chips, okay? And now, last night, we see, or in talks, right, is an investment from Apple, okay? So now they're in talks of of Apple getting behind Intel as well. So what does this mean? It means two of the biggest demands, right, NVIDIA and Apple, both wanting Intel's chips. Now, they're definitely different, right? Because Apple uses more just the chips you would think of, right? The smaller chip, obviously small chips that go into the iPads, the phones and so forth. On the NVIDIA side, we're talking about a bigger chip, right? These are those, the AI chips, right? The Blackwells, right? These bigger chips that are big, heavy things, but they're massive. I mean, what they can do is incredible, right? The ability for them to process. But that requires a foundry, okay? And that's what Intel had sort of stepped away from. It's like this big investment to move into the foundry space where you're making those big chips, those big Blackwell chips, or things for the Blackwell chips that NVIDIA is going to hang its hat on in the future, right? That's their future, these Blackwells. And then whatever comes after that, right? Versions of that, better versions of it. So the big thing here was for Intel. Intel's getting backing from both of these guys, right? Intel and NVIDIA, or from Apple and NVIDIA, okay? So it's pretty significant. So again, the government, NVIDIA, and now potentially Apple. You couldn't ask for better backers in the tech space, right? If you're a chip maker. And that's what it seems like they're going to get here. And again, right, here's the thing. So is this government picking winners and losers? So when that call comes from the 202 area code, which is Washington, D.C., and it happens to say White House on it, I think Tim Cook, okay, or Tim Apple, right, of Apple, is going to pick up the phone and he's going to say, okay, we'll do a deal. President Trump is probably going to push this deal through. I have a funny feeling that this is a government-driven, that this is an administrative-driven situation. Okay, so the question is, is it good for, is this, big tech kind of has no choice but to play along, right? It just seems to me there's no coincidence. It was the government, then Nvidia, now looks like Apple. Okay, these big tech CEOs are adjusting. Okay, and whether we like it or not, whether they like it or not, the government is picking winners and losers here. Now, we say that it's for defense, okay, and that we need these chips for defense, right? We talk about, yesterday, the lithium, okay, Lithium America, right? Getting that because, again, it's for defense. But nonetheless, you're picking winners and losers here, okay? And so is that a good thing, right? That's the thing. Is it a good thing? Or because it's not capitalistic, right? Especially when you're at this level with these big companies and you're letting the government pick the winners and losers, you have to question things, right? Are we really a capitalist system, or are we kind of in that space where, and at the same time, you got to give a little leeway because we were headed for a train wreck, right? The Biden administration had set us up for a major fall, right? In the debt markets, all these things we talk about, the commodities, right? Taking crops taking crops out of the system, taking livestock out of the system, killing all these chickens, right? Driving the egg prices up, driving the livestock prices up, making inflation for us, right? Hurting the housing market. You can see that's what we talk about, that 2022 range, right? 2020 switch over to, from low inflation to no inflation to lots of inflation. What does it do? It starts to tear our country apart, okay, economically. So we got to give a little leeway to, this administration to do these things, because when we say we drain the swamp, well, that doesn't come without a cost. There's a cost to this. When you drain the swamp, you're going to, there are things you're not going to like about it, right? Because we shouldn't have gotten there in the first place, but we did because we, fell asleep basically. And then all of a sudden you got to clean things up. The question for me though is this, is there a technocracy building, or are we the people going to be in control? That's the question. And that's why we did this thing last night on the sovereign wealth funds. Who's going to drive this? If we don't even tell people what sovereign wealth funds are and how they operate, how can we ever make decisions and say, whoa, 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 that's not what we want. We don't want so-and-so, this private equity firm driving the sovereign wealth fund, right? We don't want these things to happen. We, the people, need to make these decisions, but they're not teaching us, right? People don't know what the Clarity Act is. They don't know what the Genius Act is. They don't really know what Tether is. They don't really know what stable coins are, right? They really don't know what tokenization is. And these are all things that we need to pound away on in here, because if people don't understand that, then there's no way they can say, I don't want that, or I want this, or this is a good idea, this is a bad idea. I think collectively, people are what make the productivity in the end, because good people making good decisions leads to capitalism working, okay? When you start driving things and making choices, how are you any different than Russia or China or these other countries that do this all the time, right? These state-owned, look at China, right? It's just a lot of this is government driven, and you can see that they're struggling now, right? In a lot of different ways. Okay, so one more quick thing here on Jensen, right? So Jensen, he leads NVIDIA, okay? Now he's kind of become the first buddy, but it's quiet, all right? It's a kind of a quiet first buddy, right? He's always kind of hanging around President Trump, and here's why, right? One, he doesn't want to get derailed and lose his first buddy status, okay? He also helps direct, if he can get behind these things and get behind Intel and get behind, being able to sell these chips in China too, and I'll get to that in a second, then he's really building a safer supply for his company in the future too, right? If Intel can build these chips, he now has options, right? And if something happens to Taiwan with China, it's not as big of an impact for an NVIDIA. If something happens with China and they invade Taiwan or whatever, then NVIDIA's cooked, right? They're like, the company just bellies up basically, right? Because they have no access to chips. So this Intel thing is great for NVIDIA, right? The other thing I think is he's seeing the benefit of staying close to this Trump administration, right? And because he can help direct things like this, right? Saying, hey, Apple, you really should get behind Intel because we did, and here's why. It's to our advantage. It's to the advantage of the U.S. It's to the advantage of the defense of the U.S. and so forth, okay? But really, they're going to think about themselves first, which is this is good for their companies, all right? And then the other quick thing on this one is that we've got this battle with China, okay, between Huawei, right? Huawei can compete with Taiwan Semiconductor and some of these others, and with NVIDIA. And so what Jensen Huang, they want to sell these chips into China because then it doesn't allow Huawei to make that money to actually grow. So if you can actually steal the growth out of Huawei, then you are basically stifling your competitor. And not only that, you're making revenue in the meantime, selling your chips into China. Okay, so it's a win-win deal for Jensen Huang, and I think he's starting to wisen up to this, and that's why he's kind of taken a low-profile situation, hanging around the Trump administration. He has access to the White House, the Oval Office. Okay, he probably always picks up the phone call when it says 202 on it from that area code, and he's very responsive because I think he's starting to see the ability, the good things that come to someone like that. And when you get big like that too, you almost have to be a part of it, right? You just get so big. Okay. So hopefully that makes sense between the Oracle, Moran, and Intel, how these things are connected. And the lower interest rates, the debt market, the beginning of a bubble potentially forming with, forcing these debt markets, forcing other people to take chances, right? Because, this is that race, right? We are definitely in a race, okay, with AI, and they're going full speed ahead. And part of that is leverage, and part of that is debt. Problem is, it's okay for some, it's just not always okay for everyone. And it's going to pull some of the stragglers in, right, that probably shouldn't be doing this because they don't have a choice. It's either we do this or we belly up, one or the other. Okay, so that's kind of how this stuff forms, I think, right? That's my perception on it. All right. Okay, so then we have this HSBC quantum computing trial. And let me see here. I think I have a little clip or a little still on this. Actually, I had this one on Intel too, I think. I'll just put this up here while I'm talking. And okay, so that's the thing. Talks are in early stage, working more closely. What does that mean? Working more closely discussed. I'm not sure. Intel has approached others. All right, but I'll just leave that up there for a second. And then I want to flip over to this quantum computing one here. Okay, so HSBC, okay, a big bank, has been putting big money into quantum computing, right? And so they had some trials, and the trials beat Wall Street rivals trials. Okay, so apparently these guys must be competing behind the scenes on whose quantum computing is the best, right? And so so here's the situation, right? It's the first bank to use quantum computing on real trading data, and HSBC has made advances with IBM's Heron. Okay, so this must be a new project underneath. Because what was it? I forget the name of the IBM thing that it was always promoted to us. It was on all the commercials. Watson, I think it was Watson, right? Watson. So that was like they promoted the heck out of that. This Heron must be an advanced version or some other project, right? That's in this quantum computing space. Okay, so HSBC's been using this IBM's Heron, right? And I don't know how this works. Like, does HSBC provide programmers? I don't know how this joint project works, but clearly IBM provides the quantum computing and the systems, and then somebody else comes in with the data and the analytics and the people. So it's a joint effort, I would imagine. Okay, HSBC quantum trial saw a 34% improvement in bond price predictions. Right, so this is great, right? Better predictions, better predictive capacity. The problem is this, though. Is it worth the cost? Okay, how expensive is it to have quantum computing and have access to it, right? So this is going to cause us to go into this haves and have-nots. So the hedge funds that are huge are going to they're going to be heavily invested in this. The smaller hedge funds, okay, that maybe cater to, how do I put this? Big hedge funds tend to become behemoths, and they can't usually produce as good of returns, right? And a lot of times they resort to cheating to do that, right? They get on the inside, they get inside information, and then that's how they make, again, they get in tight, and then they get inside information. Smaller hedge funds tend to be higher producers because, one, they're more nimble, right? They can move through things more quickly. The problem is this creates a division between those two because the big ones can get access to this quantum computing, which gives them potentially better predictive results, where the smaller ones actually lose out because they can't pay for this quantum computing. And, and the question is, where is this break point, right? So this is our big question, right? We're probably 5 to 10 years away from affordable quantitative computing, which is a good thing, okay? And the question is, when they combine this quantum computing with AI, I mean, this could be like just beyond what we can imagine, right? At what point, we were talking about this last night, and I don't mean to get too far off on this, but the human brain, they figure, takes about 20 watts of energy. And it's pretty impressive what it can do. You know, it's got good memory, RAM, right? It's got good processing power. You know, it's connected well to eyes, ears, smelling. So we're pretty good little computers running around. You know, God gave us a pretty nice little computer and an operating system. These things, right, that are trying to compete with us, okay, these quantum computing and things like that, these things gobble up tons and tons of energy. And they're, you know, and they take tons and tons of money to try to duplicate that. Now, there are also things that computers can do so much better than humans. And you know, and that's the fine line between these things, you know, decision support tool, helping humans make better decisions, or actually surpassing humans and displacing humans. That's the big question here that we're always dealing with. Now, the downsides of this, the upside is decision making, right? Can help you make better decisions. Another potential upside on this is what's called encryption. So we say that when you do encryption, right, you know, the longer you can make the password, right, the safer it is. You know, you pump in your password, it says, you know, needs more characters. You got to have a number. You got to have an uppercase, lowercase. You need to have a, you know, a exclamation point or a pound sign or something. And then all of a sudden you've met their criteria for a password. Well, just imagine that, right, in terms of encryption. The longer you make that thing and the more complicated you make it, the harder it is to crack it, okay? And what they do is they, quote unquote, use random numbers, right? You just have this random number generator, it creates these random numbers, and then you get this long password or encryption, right? Think of it like that. And the question is, you know, quantum computing can chew through that stuff pretty fast, right? Because it comes at, imagine it like we're going from 2-dimensional to 3-dimensional, okay? And that's essentially the way I think of quantum computing is, you know, you're used to X, Y, and Z axis, right? You know, things on a flat plane. Then all of a sudden you go in terms of 3-dimensional, right? And all of a sudden you got the Z axis in there, and everything changes, right? So that's kind of where we're at on the encryption front. And so JP Morgan is creating their own quantum stuff for encryption, okay? Because again, you know, in the banking space, that might be what keeps you alive in this, you know, crypto digital currency space, is if you have encryption better than others, right? It's another competing factor. So one is decision making, two is potentially encryption. Okay, those are both potentially good things. The third thing that comes with this stuff is surveillance, right? Private and government. Okay, so again, quantum computing can impact the most unimaginable things, right? But the key is who controls it. We the people or the technocracy, okay? Who want the power for themselves, it seems like, right? And who don't really believe that we have that much value. Okay, so again, this becomes a battle between the haves and have-nots again, and we're seeing a lot of that, right? Government decision-making, government picking winners and losers, okay? Haves and have-nots, and we're seeing this with the quantum computing, and we're seeing this with the AI. So we're getting to a point where we could see such a divergence between the haves and have-nots. Now you get this situation where, you know, and that's a lot of times what creates the civil unrest. If you think back to France and their, you know, their civil war, you know, the bourgeoisie, right? You know, the riots in the streets, the guillotines, all that kind of stuff, it's because of haves and have-nots, right? And so we're seeing these factors, government choosing winners and losers, quantum computing, AI. The people who can afford it, their decisions get way better. The people who can't, their decisions are subpar, relatively speaking. Again, because we're all humans running with a 20-watt brain, but it's the decision support tools that make the difference. So these are the big questions. All right. Okay, so let's look at some charts here. Let's jump in. That's a lot of, again, a lot of me here. All right. And we'll look at some charts. At least that'll break this up a little bit. Okay, so what I wanted to look at is, let's see. First thing, let's see if we can let's take a look at Intel. So this is a weekly chart on Intel. And you can see this goes back to like 2013, 2014. And you can see Intel was in a nice uptrend for a long period of time here. We can draw a little trend line on this. Stands out pretty nicely. So let's just start from here, and we could just draw a trend line, something like this, let's say. And you could see it was starting to toy with this trend line back in here where it was starting to break down, right? You start to see it breaking this trend line, and then you see it break below, and then it comes back up and retests, okay? And then you get this sell-off. Then you get a retest. Where do you get a retest? Pretty much into this area, right, where there's a lot of volume, okay? So we get this, right? And you see a lot of volume back in here, and then you get this retest back up into that high volume area, and then Intel sells off, okay? So people will say Intel went from a low of what, $18 or something like that, somewhere in the $18, and now it's trading at, let's say, 32. So you could say, oh man, Intel's doubled. I think I missed out. Well, unless you look at a chart like this, you're saying, well, you're thinking like, I can't touch that thing. It's already doubled. The point to looking at Intel is this, that NVIDIA got behind it, the government's behind it, and now Apple's potentially getting behind it. And all we're basically doing is breaking this trend, okay? And so again, doesn't mean you got to jump in now, okay? But it's something you want to keep in mind, right? So if we call that the trend, right? And we're going to follow that green moving average down, and we call this the trend, we've just popped above. So what you would want to see is, can this thing start to hold up above this area, right? That's the key. And if it does, then it's not that hard of an imagination to see that this thing could come back up and retest something in this area. So you're looking at, mid 30s to say mid 40s, something like that. Wouldn't be that hard. So let me just throw a box in here just to give you an idea. So something like this, right? At the bottom of this range into say the mid 30s, something like that where I put that purple box. Doesn't seem that hard to imagine. We're not far from it now, right? So a little bit of a pullback in Intel. Okay, a bad news day. That's what you're looking for, a bad news day to buy on weakness, okay? And manage the risk against something, right? Find some level to manage the risk against. What would that be? I mean, you could say this area, right? This might be, again, we talked about this, head and shoulders in the Bitcoin, okay? And we could say the same thing here, right? Let me just put a box. I think these are easier to see. So let's just say if this is, if we've got this area, okay, you say, okay, well, this is a shoulder inverse, right? This is a head right down in here. Okay, and then if you got to pull back into this area, say back in here, I'll just do it. It's not pretty, but let's say something like this. Back to trend. And you could ride this thing for a while, right, to the downside. Let's say that it does this. I don't know what's going to happen, but let's say that it does. Let's say it follows this line down a little ways and we form another shoulder down in here. Well, then you can manage the risk against that shoulder, something like that, okay? So you're always just looking for something that seems to make sense. And what do you look at? Memory, right? The markets have memory. Okay, institutional managers don't want to stick their neck out, right? Neither should we. Okay, so when they're letting things come back after a nice big run up like this, so for instance, let's say that Apple says no, we're not going to do a deal. Okay, and and Intel comes down for a couple days or a couple weeks. It's not going to be in the media. It's not going to be in the news. No one's going to be covering it, right? But that's when we have to remember, like, hey, that's right. I was interested in Intel, and it's actually weak now. Now's my chance to get in when it's not in the media. Okay, when we cover again, we don't have a choice but to cover the headlines, right? The headlines come out. Intel, $18 billion, or Oracle, $18 billion, bond deal. It's the news, and or Apple, Intel, potential talks, or this or that or whatever. You can't help but cover that stuff because it's the news. But really, what we need to do is cover the stuff that was a big deal and now all of a sudden is not, for some reason, right? The quiet stuff, right? Listen for the quiet. Again, when things get quiet, that's when things can move. So again, that's what we'd be waiting for here, is to be patient with this Intel. Let it come in a little bit, let a little time go by, keep it on your radar, check it every morning, put it on your, put it on a list of 10 different things. Okay, I think I like this Intel idea. The government's backing it, NVIDIA's backing it, Apple might be backing it, who else might be backing it? You can't get a better situation than all these companies backing it. We know that Intel's been a powerhouse before. We know that it's been all the way up at $70 before. So it has the room to run. Okay, so again, it's got memory up in there. It's not that hard to go to to retest all-time highs. Surely wouldn't be hard to test this, $50, somewhere around in there, because you can see that prior high. So again, the key though is you got the concept behind it, you got the backing. Now we just need the technical levels to manage the risk against. And if we had a harmonic structure, that would be even better. All right, so I think that's good on that one. Let's just take a look at IBM, just because I haven't looked at it yet today, but I haven't looked at it in a while. But look at so here's IBM, right? It looks great, and let's switch this over to a monthly so we can get an even better view. Okay, so you can see a couple waves here with, so IBM, let's say we got to pull back into, I don't know, something like this area, something like that. That would be a decent area to look at IBM. Why IBM? Because of this quantum computing and this Heron thing, right? Watson was kind of a dud, but they promoted the heck out of it. I'd never heard of this Heron, right, until I saw this article with HSBC and the quantum computing. So all of a sudden, to me, that's like, hey, like they were promoting Watson. Watson was a dud. They're not promoting Heron. Heron looks like a winner. IBM stock's going to all-time highs. Maybe we need to wait for a pullback in IBM, some bad news, and maybe we try to pick up IBM on a dip, Hopefully that makes some sense. All right. Okay, so let's go here and take a look at the Dow real quickly. So the Dow has been playing along. Again, remember we were watching this big red flag back at the end of last year. No surprise we got this pullback into this area. At least for me, it wasn't. Again, tariff related. Again, big deal about tariffs, but now the tariffs are coming through. A lot of good things are happening with tariffs. And again, not being covered and no fear around it. Okay, how funny that works. Now, the Dow has participated, right? It couldn't break through. While the S&P, while the NASDAQ were making moves up to their full upside harmonics, the Dow didn't have a harmonic. It couldn't participate, but now it's actually breaking through and it's on all-time highs, okay? And so what's the big target in this Dow? I mean, a big psychological level is going to be 50,000, right? So again, is that something they're gunning for by the end of this year? As long as the NASDAQ and the S&P hold above those harmonic levels, we have a place to manage the risk. We kind of know where we're wrong, okay? And so on weakness, you might want to buy this. Now, if we start breaking through those old harmonic levels, now that's one thing that alerts us and says, hey, potential red flag, all right? Okay, and then let's look at this. Quick look at the S&P. Okay, looks just runaway freight train. This is a weekly chart on the S&P. Here's our harmonic structure. I'll let that fill in. You can see it's coming back in, right? We've had a couple days of a pullback here. And, so again, will it get to this 65.47, the white dashed line? If it does, what does it do there, right? We look to see if it had a reaction on the upside. Again, September to December contract roll. Most of you know we've been through that multiple times. Does it come back and test the 65.74? If it does and it holds there, okay, great. That's a great spot to jump in again. Maybe a spot to buy some of these other tech stocks that we've been talking about, other things, right? Things that you may have on your watch list. But at this point, I would say it's right back to trend, right? If you look at this, it's right back to this black line. There's a good chance we'll see a bounce out of, out of stocks today, right? Based off this, if I were guessing and not looking at anything greater detail, I would say there's a good chance that this S&P is probably going to bounce today. Okay, decent chance that up, sideways, a little bit, sideways to up a little bit would be my guess. Okay, let's look at we haven't looked at this in a little while, the NASDAQ. So again, the white dash line, 24,165. That was our harmonic. You can see this thing's, I've got so many charts open. This computer's a beast, but it's still getting, I got to clean this thing up. It's just, you can see it takes a while to rebuild these charts. This should pretty much be instant, but I just have so much stuff on these things right now. So again, this is what we'd be looking at as a pullback to this 24,165. Anything below that would be problematic. And there's a chance of this, right? Like, here's something I'm seeing. Let me just show you this. So there's a moving average, that gold moving average, right? And then we have this other moving average up here starting to roll over. Let's just draw some kind of a fan up there. Okay, so there's a decent chance that we could see, I'll just put this in a circle, that we could see this thing kind of trade in this zone, right, for a little while. Right, inside that little triangle. There's a chance, right? Again, markets like to, when they've had a run like this, they like to let the moving averages come up to meet them, okay? So that's kind of what we're looking at here, is potentially trading across this range a little bit inside that yellow box for a while. And do we come down and retest this white dash line, right? The 24,165. That's going to be a big key. Until something like that breaks, I would, as much as I don't like it, like I think this market's so overdone in so many different ways. It's being led by a few things, but nonetheless, like we're starting to see things participate. The Dow's starting to participate, right? The Russell, so this is what we call broadening out. Let's take a quick look at this. Let's take a look at the, okay, so this is the Russell 2000. Let me get this on a weekly. That should be better. Okay, so the Russell kind of popped its head up here in this purple box. Let me just show you. Kind of popped its head up the other day. And this is why, people don't like sticking their head up, because they may have just gotten whacked a little bit here. But you can see the yellow dot, the second yellow dot, and then this one, right, I'm going to put in there. The Russell popped its head up. We talked about the Russell the other day, the regional banks, the software companies, a lot of smaller companies fit in this Russell 2000 index. Will it participate? This is small business, right? This is why I also look at those manufacturing indexes, because if we get manufacturing coming back here and it shows up in a good way, then it tends to benefit this small cap space, okay? Because why? Manufacturing, you manufacture something and what does it do? It leads to little mom and pop shops, little, machine shops coming back to life, little, all kinds of little things, right? textiles, I mean, you name it, right? Small business is the growth creator of this country. So if we're going to grow our way out of this, mess that we, this this mess that we're in, right? The mess that we've been placed in, the you know, the theft of our country, essentially, right? If we're going to grow our way out of this, then it's going to require the small cap. I think Russell's a good place to look to see if we're getting growth at this, small business level, right? Smaller business, not totally, not like 1 and 2 people, but, we're talking like 50 to, 800 job type companies, right? Somewhere in that range, these small businesses, depending upon, again, how productive they are, what they're doing and so forth, somewhere in that range. That's kind of what we're looking at here with this small cap index. All right. And then, let's look at, so we looked at silver yesterday. I wanted to cover this. Let me get this. While that's building, let me get this ready. So the gold's ready to go. Okay. So this was the silver again. It's popping its head up above this level. So where are we at? 45. So we talked about this 43, 45 being a good technical level to get to. We're in this purple box. Wouldn't be surprised to see it trade around this range for a little while. Why do I think that? Let's take a look at gold here. Let's take a peek at this. I'll show you something that happened in gold. I'll show you a couple things in gold, right? So here's gold on this is on a tick chart, okay? But this is the, for those of you who are interested, this is the December contract in the gold, okay? So this one's going to last for a little while. This gold can roll sometimes through August. The August contract, it has a lot of volume in gold. But then now we get to this December and it holds for quite some time. So this is good because we get data, right? Probably doesn't mean much to you, but for me, it means a lot. This becomes a good market to trade because we get a lot of data and it's fruitful, typically. Here's what we've got, those divergence. You can see these 2 purple lines I have, right? The price keeps going higher, but the indicator down below is going lower. Okay, so you can see the yellow dots pair up, right? So this first yellow dot here, right, pairs up with this yellow dot down here, okay? And the same thing as we go, this dot pairs up with that dot, this dot pairs up with that dot. You can see if I line them up, right, I've got them lined up right there, so that they're the same. And so the key is price continues to push higher, the indicator continues to go lower, right? And we're very extended. Let's look at this on a weekly time frame real quick. You can see this market. I mean, just look at that thing, right? It's not linear. That thing is just, pretty much straight up. Will it take a break? That's the question. We've looked at that gold-silver ratio, right? 100 ounces of silver to buy an ounce of gold. Can gold pull back to help that ratio come in to say 60, 70, 80 to 1, right? 80, 70 ounces of silver to buy an ounce of gold. That would be more to the norm, okay? What can happen here? Here's what I want to show you too. This is one I wanted to show you. All right, let's take a peek at this. So here's what we saw in the last couple days in gold, all right? I'll just read it, right? Investors buy the most gold ETFs in more than 3 years. Holdings grew nearly 27 tons on Friday, giving fresh legs to bullion's rally. Okay, so again, people pile in, but at some point, when does it become the last buyer is bought, The reason I've been careful with gold is that I've seen people get hammered in gold, right? Where this thing can lose 10 to 15% in no time, and then if you pay 10% to get into it, you're all of a sudden now down 20 to 25%. The other thing that happens here is this ratio, right? Silver seems better in the sense, in a lot of different ways. We hammered that yesterday. I don't want to say the same thing again and again, but these are the kind of things we're looking at to see, like, when the last buyer's bought, right? We see all these people piling in. Why are they doing that? Why are they finally doing that? Okay. And if I look at this, I don't know if I have this ready or not. Let me see if I can pull this up. Gold. Well, actually, it's not that overvalued. So we want to I want to look at some of these things. We'll do that tomorrow because it's a lot in the commodity space, right? There's a lot of things. But what we're looking for is, is gold, what is the value on that? So we're at 70. So we've got high readings on the daily time frame on sentiment up in the 90s. Weekly, we're not that bad. It's surprisingly only like in the 60s, which is shocking to me. And then we have on the monthly, we're only at like 70 to 75, right? Bullish. So these are the kind of things that push that number, that bullish reading from, that synthetic sentiment reading that we look at, that for those of you who followed for a long time. I haven't covered this in a while, but you really, anyway, I don't need to get into the details of it. But the point is, like, this is the kind of stuff that drives that sentiment, that synthetic sentiment from 75 to 85 or 85 to 90, okay? And when you get to those extreme levels, that's when we have a good indication the last buyer's bought. So it doesn't have to get there, but it's nice when it does, right? It gives us more confirmation that the market's overdone, and so we do have it on the daily. We're getting there on the weekly to some degree. And then when you see stuff like this just says to me, like, be careful, right? We need to be careful with gold when we see people piling in like this. Okay. And then let's see here. Make sure I'm still live. I don't know. Sometimes it looks like my actually video feed cut out, but it looks like people are still chatting in there. Okay, good. Hit the like. Yeah, thanks, Frank. Hit the like button if you can. That's great. Never hurts. Good morning, TZ Burton. Same here in Georgia. Rachel Hawk. Okay, so Trumpet, you live in Georgia. All right, great. Rachel's out on the West Coast. I know that. It's kind of good to know where you guys live. It's kind of nice when we can ask questions about things. We're here in Central. Yep, there you go. Rachel Hawk in Central. Okay, good. Good point. I really don't know things. That's why I'm listening. Good point. I don't really know those things. What things, Rachel? That's why I'm listening to you. Okay, JD White, good morning. Glad Craig is back. Thanks, Jay White. Good to see you in here. Good. We'll catch up here soon. David Rocket, the shorts lost control of the COMEX. Huh. Can you explain that some more, David? Let me know what you think about that in terms of, you obviously know what you're talking about when you mention the exchange and stuff like that. So just let me know what you're thinking there. I'd love to open up that for questions. Okay, so I think we hit silver, we hit gold, potential pullback in gold. See if silver can hold up, see if it can go sideways, see if it can consolidate for a while. At some point, unless something really bad's going on in the world, like really, really bad, at some point these metals have to take a break, okay? And so silver's at that spot where it can take a break for a while. What happens to gold if it takes a break? Does gold give back 5%, 10%, 8%, 20%, Can't rule it out. We don't know until if it starts to happen. That divergence starts to give us indication. This starts to give us indication, right? We're looking for things that give us that indication that it's potentially rolling over. Okay. And look, I take gold shorts and gold all the time. They're little stabs, right? It's like, bang bang. You're 20 minutes, 30 minutes. And they work, right? So that, counter trend moves work. You just have to be very careful when you're taking counter trend moves. So there are ways to do it. Long the silver, short the gold, but you just have to be really careful, and so I'm not promoting that in here. For those of you who can do that or who have the desire or the willingness and the time and you can do that where you're long the silver, short the gold, and take little stabs here and there, right? And it can work quite effectively. All right, let's hit this real quickly. We've got this, I want to go through this Section 232 tariff stuff because nobody's covering it at this point. Okay, so we talked about SMB Schlegel Holding. Okay, Section 232 update and the risk of government shifts. Okay, so we're getting close to the end here. All right. So again, Section 232, right, there's this connection to being a national security concern, right? It takes about 9 months to complete one of these Section 232 investigations. The Trump administration seems to be getting this down because they're moving through this more quickly than what the so-called experts who used to do this are used to, right? So they're moving through this pretty quickly. Section 232 tends to have a more deep legal basis to it, okay, versus reciprocal tariffs, okay? This Section 232 is also kind of called sectoral tariffs, okay? Now, there's 12 of these similar investigations in the system right now, okay? And let me see if I think I had something on this. Yeah, here we go. Okay, let me put this back up. And, okay. So again, these are the sectoral tariffs, and okay, so let me just go through this. So they allow tariffs on goods to be deemed critical to national security. Okay, we mentioned that. Trump used law to impose tariffs on copper, steel, and aluminum. Okay, we've been talking about that. There's also been some things that are probably reciprocal tariffs that have kind of crossed the lines there, and then maybe used for tariffs on pharma, chips, minerals, and trucks. Okay, that's what we want to get into here. All right, this is the important stuff that's going to have an impact on things. Okay, all right, so so the way that this has been used is to establish these the way that I think they're doing this, okay, is they establish the sectoral tariffs. They know that these have good legal grounding, okay, easier to defend. And then what they do is sometimes stack these reciprocal tariffs on top of them, okay? And Trump rolled out a series of these in August, okay, country by country, the reciprocals. Okay, so here we've got this situation where the U.S. is mulling tariffs, okay, on robotics and medical devices. So where do we expect the impact and the pushback It's going to come out of the aircraft, the automotives, and the medical industry. Okay, so again, this is a new set of tariffs, right? And it's focused toward aircraft, automotives, and medical industry. All right, and it's really in the robotic space, I do believe. Okay, so we should see a lot of pushback on these robotics users. Okay, namely the automotives. Okay, and and the because I think automotives, if not mistaken, they're the number one user of robotics. Okay, and then I think medical kicks in. I think medical is kind of high, and then aircraft somehow. But I don't know how aircraft is. But I know that one's in the mix. I just don't know. I don't. That one doesn't connect. I mean, but we could look that up, right? How are robotics used in the in the aircraft space? You can imagine Boeing and different things. I just don't get that one. Okay. But nonetheless, I think automotives will be a huge pushback, and I think medical too. All right. So countries, not only do we have to look at companies and, industries impacted, we have to look at countries, because a lot of these big players are going to go back and they're going to use their corporate, their company structure, right? They're going to go back to their government and say, hey, we need help on this. Kind of like we saw with Switzerland, right? When Switzerland tried to do those, President Trump slapped them with a big chunk of tariffs. They had no negotiating power. They came back to the U.S. and nobody really met with them, right? They met with, I don't know, maybe Marco Rubio, right? Which is more of just a kind of a Secretary of State level type thing. It wasn't really again, they weren't meeting with the trade representative, Jamison Greer. They weren't meeting with Scott Bessent. They weren't meeting with Howard Lutnick. They weren't meeting with President Trump. That pretty much tells you that you're kind of down on the list, and, you're probably not going to make much headway. So the key is that we're watching Japan, Korea, Germany, Denmark, and Canada, right, to see if they're in talks to reduce their tariff burdens. Okay, if they can actually make some headway on this front, right? And so the other thing we have here is this EU-US trade deal. Okay, this is another thing that hasn't really been covered lately. Is this? Do I have the right one in there? Yeah, I think so. Okay, so here's the key: is the U.S. Automotives, okay, in this deal, all right, have actually dropped to 15% almost across the board, right? This was a cut from 27.5% to 15% for EU cars, right? So it's not being covered, not that much, right? I mean, obviously it gets a headline here, but it's not being covered in terms of mainstream media. Like, everybody was freaked out over these tariffs, in April. Now nobody's freaked out over them. And it's down to a reasonable level. This is what I think our administration wanted, was to get it to fair, trade deals. Where's that? 15%. People said, well, 10 to 15% seems fair, and so they had to take it to 25, 27 to get it back down to 15. And now it seems like it's stabilized here. And it seems like everyone's functional, or at least for now, right? Functional on this front. Now, let me just show this one, because I pulled this one too. It was kind of interesting. Again, just for perspective, top 10 importers of cars to the U.S. Again, you can see Volkswagen, 80% of their export, of their top 10 importers of cars. Okay, yeah. And then you can see, so we've got European base. We've got Volkswagen, Mercedes to some extent, BMW. Let me remove myself here. What are the other two? Honda and Ford. Okay, so again, we know Japanese. A lot of these are Japanese. Hyundai, Korea, South Korea. So again, a lot is Japanese. So again, Japan, Europe, and South Korea, right? Big car producers. And then obviously China too, but it's mostly in the EV space, right? Which we've talked about a lot. Anyway, a lot is going on in this space, and it's positive, and it's really not being covered, okay? And that's where we have to give some credit to the stock market. When President Trump says, you're going to get so tired of winning, even though I technically don't like how these markets are going nonlinear, and I think that we're headed for problems at some point, at least right now, you can't fight the system, and so as long as we stay above those harmonic levels, for me, 65.74, 24.165, and those, and hopefully we get some new ones that come along. And there is one that I saw the other day was it the NASDAQ? I want to plot that one out just so we have more risk management levels, because I think it gives us some other levels up here in blue sky space where we can actually manage the risk against it. I'd love to see something come through in the Russell 2000 index, right? It hasn't had one in a while. That would be a great sign, right? If all of a sudden we had a harmonic structure come through in the Russell 2000 index and it started to break out to the upside, and the other ones kind of sat still, right? The NASDAQ, the Dow, the S&P sort of sat still a little bit, and the Russell was the one that shined. What does that tell you? It tells you that we're building things from the ground up inside the U.S., and we can actually potentially broaden out. Okay, if we don't get that, and this Russell stuck its head up and it's going to get hit hard from here, that doesn't tell us a good sign, right? So that's why we introduced the Russell 2000 a week or two ago. And now we've got the bases covered from the indices. And then we'll look at, we look at the Japanese Nikkei, we look at the European, the German DAX, because it's a powerhouse stock. We should probably start looking at China, maybe something in South America. Okay. And I think we'd have our bases pretty well covered. Maybe we'd look at the India's stock market, but you can see we don't have to add that many more, and we've got pretty good coverage. Right now, we got pretty good coverage of the US with these 4 indices. Now we can start attaching these sectors and sub-industries and stocks and different things. And then we can look around the rest of the world and we can see, these other big geographic regions, and we get a good read. It's not perfect, but it should be pretty solid, right? We should have a pretty solid look at things. All right. Only 1 or 2 more things here. Government shutdowns. Does President Trump want to shut down? I think I actually have one on this too. Okay. All right. Does he want to shut down? I don't know, right? I think maybe so. Let's see how this unfolds and what the impact is if we get one. It might be a reason to be cautious on stocks, of course, right? But will stocks really care? They haven't so far. And is this coming back to cuts in jobs? All right. The number sticks in my head that, what is it, 6 in 10? I thought I had a note on this too, but maybe I lost it. I'm not seeing this here. What did I do with that? Thought I had something. Yeah, here we go. Okay. So a lot of permanent job cuts are likely to occur if we get a shutdown here. Okay. And in any typical shutdown as well. I think the number is that 6 in 10 government employees are deemed essential. So that means 4 in 10 aren't. All right. How many of these cuts are going to occur? Again, there's a good side to this and there's a bad side to this, right? This is part of draining the swamp potentially. Okay. And this is what could come out of this shutdown. We'll see what happens, right? I think if you look at this, Schumer's sort of been muted. Thune's been muted. Even Mike Johnson's been muted. We haven't really heard anything out of these guys, I don't think, that much since the big, beautiful bill, right? Little bits and pieces here and there, but essentially they've been muted. And so let's see how this unfolds, right? And then 2 more quick things. We've got this, just because I think they're kind of important to cover, is Trump meets with Pakistan. Why does this matter? Well, Pakistan's Prime Minister Shehbaz Sharif, signed. This is a sign of improved ties with Pakistan. Why does this matter? Well, Pakistan and India don't get along. We've been in negotiations with India. So is President Trump kind of making friends with India's enemy to get India back to the table? So is he using Pakistan to some degree? Now, the U.S. halted military aid to Pakistan in 2018 off the Afghanistan exit. So remember, we started to exit Afghanistan, and then we blew it right away in 2021, right away when Biden came in, right? We blew the exit out of Bagram. And so that didn't help a lot with Pakistan, okay? And then we saw Pakistan and India. I mean, these are nuclear powers, so that's the thing. They're both power players, and they've been hostile enough at times where, there's been a fear of them firing off a dirty nuke at one another or something like that. So the question is, the relationship hit all-time lows under the Biden administration, or significant lows. And so this meeting with President Trump reflects improved attitude toward Pakistan. It also puts that pressure back on India. And I think that's the key, right? Again, India, why? They play a key role with Russia, okay? If you can shut off India buying the crude oil from Russia, it puts pressure back on Russia. Again, we don't know what the ultimate objective is. After what's happened the last couple of days, do we really want to stop war with Russia or not? I don't know. But if you do, then this is the pathway you would take, right? You'd want to try to put pressure back on India to shut down the buying of oil out of Russia, really start to hit Russia, get their attention. Okay, so this could be an indirect way of putting pressure back on India. We also saw the H-1B visas that hits directly at India. We saw that happen. We saw, Trump putting pressure on India's Modi multiple times now. All right, I'm going to let that one go, but hopefully that makes some sense. That's an interesting one to watch today. And then the other one was that Erdogan, Turkey's Erdogan, is going to be at the White House today again, trying to strike a deal on Boeing planes, fighter jets with Lockheed. So Lockheed Martin, Boeing, and LNG. In the talks, I think it's something like $50 billion worth of value of $50 billion worth of deals in the talks. So if you, and I don't have that one up anymore, but if you think about like what President Trump's done, right? He went to the Middle East, drummed up a bunch of money, right? Then he went to Japan. He got that blank check for 550 billion, right? Then he goes to Korea. Then he goes here, there, Europe, right? And now you see these deals are getting smaller, right? $50 billion with Turkey, okay? So again, I think he started with the big stuff, and he's working his way down, okay, through this whole thing. And so to me, that's a positive sign, right? These are all things you would expect to see. And again, the tariffs aren't being covered. Hopefully that makes some sense that they're stabilizing, right? They're going through the sectoral tariffs. They're going through the legal system, the 9-month process that they're hopefully going to squeeze it down to 6 months. This stuff's coming along, right? They're doing some good things. The question is, the technocracy on the other side of things. And that's why we're doing this roundtable. So hopefully some of you caught that roundtable last night. We covered sovereign wealth funds and robotics. It was pretty even split. Started off with robotics, kind of blended the two a little bit because I think there's a connection there, especially with the Middle East. The Saudis are definitely backing this robotics. And that's a story for another day. But with that, I think we're done. I think we covered everything. See if there's any other questions in here. Please share the show. Yep, thanks, Jay White. Even Doge. Is Doge? Okay, let's see if David Rocket. Okay, so David Rocket. All right. So lost control of silver price, which has been suppressed. Lost shorts. Okay. For example, JP Morgan was convicted and fined, but never stopped. And then today there is no anchor on silver. Should continue to rise to meet the demand. Yeah, I think that there's a good point to that. Again, I think that's a good underlying thought process. The key is now manage the risk, right? Especially when this thing gets up around this $43, to $45 range. It's risky, right? It could pull back. Does it go sideways? Do we see a consolidation? And if so, then I think we're on target for that $50 per ounce. Okay. And then if it climbs above 50, well, then it's who knows, right? Then we have to get into all different types of right? Then we have to look at other things, right? We'll have to start looking at growth markets and expansions and things like that. And hopefully we get some harmonics to guide us. I mean, that harmonics really did a nice job for us. That 37, 39, what was it? 30, I forget the number, 30, whatever it was. Anyway, we had that nice level that we have, that full upside harmonic level, 39, 20, I forget, 30, 37, 39. I can't remember. I have too many numbers in my head. But we'll come back. We'll take a look at that tomorrow on Commodity Day. So with that, thanks for joining us. And an hour and a half. I think that's our longest one ever. So have a blessed day, everyone. We'll catch you tomorrow on Commodity Day. Thanks.